Good morning, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's, again, new title, Nadex Weekly Market Analysis. So we're trying to mix it up in the new year, changing some names around. We want to try to provide a little bit more content for you guys, and as well as, I think the camera's on. It may be on. I clicked the button, but again, first time trying it. I can't actually see if it's on or not. So if it is, great. If not, we'll get it better next time. So it's January 5th, 2000. Oops, it's 2020. Oh man, I'm already messing this up, guys. I knew it. 2021. There we go, fixed. Gotta love multiple monitors. First time of the year. Pretty excited for what we have coming this year. I know a lot of things you guys actually don't know yet, but we have some cool education summit ideas. The morning analysis that we're doing every day. Todd and I at 9 o'clock in the morning has turned out really well. It's been very fun to do, and we want to make sure we continue going forward with that one as well. So there has been some news. If you guys watched this morning at 9 a.m., literally as soon as I mentioned oil today, Russia came out with a quote about not doing it. So we had a big oil pop, which actually gives us some great opportunity this morning. So let's just dive right into things. First things first, if you guys don't know who I am, most of you do at this point. I've recognized many of the names on our John, Jerry, George, Joseph, Ed. Where's Lynn? Lynn better be in here too. She's one of our regulars also. I see Ken, Philip. So again, many of you know me. I'm the president and CEO of Keep Trading Simple. For me, my passion is really education. I love giving you guys new ways to look at things. I love analyzing the markets. I've been doing this now for Nadex for probably about 2.5, maybe almost 3 years now. I've written articles for them. I've gotten many emails back from you guys about, giving you guys confidence, and that's what I'm here for. So my goal each and every week is to give you guys one type of golden nugget worth of information, whether a new way that you look at things, could be a new way to change your strategy around, or a new way to focus on money management or managing your own risk. I've created a number of different programs for Nadex, in particular the 30-minute trader and the 5-minute binary courses are the ones that I'm probably the most well known for. But I've also done high volatility trading. Dan now mentions a strategy that I used to teach a few years ago, what I used to call Nadex butterflies. Definitely have a big news trading kind of presence as well. So I've kind of done a lot of different things. Started trading back in 1999, the 2000 tech bubble era. So really seen a lot of up, down, left, right, sideways, crazy market conditions, 2 different bubbles, COVID, now a pandemic. I can add that to the list of things that I've seen. I've been trading about 20 years. So started as a traditional trader. So the way that I analyze charts will be a little bit different. You're not going to see MACD, RSI. You're not going to see a whole bunch of indicators. I really focus on the basics. I focus on supply and demand. So that's what I'm going to be focused on. If you guys see horizontal lines on my charts, there are indicators, but I will hand draw a lot of these as well. And I'll kind of do my best I can, the best we can today to see where the potential opportunities are. So before we begin, let me make sure we cover our Nadex risk disclaimer. You would think I'd have this memorized, and I probably could do it with my eyes closed, but we're getting close to it, right? So trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to end of their transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, Nadex is a registered trademark of the IG group, and look at that right there. I do have 21, so I knew I changed it somewhere. But again, it looks like we are good to go at this point. All right, so first things first, we're going to cover the upcoming news events. Last week, this was a little bit difficult to do. There was really no news going on whatsoever. It was the last week of the year. So we do have some news to mention this week, particularly what happens late in the week. We're going to cover indices now. The indices have had some absolutely crazy movement. I expected it yesterday. Yesterday morning, I mentioned the potential for a trap. We got the exact trap that we mentioned, and it just fell through the floor. Forex, a lot of stuff going on. Brexit is done. Right now, we've had some crazy movement. The CAD is moving today. The pound is moving. Yesterday, it was the euro. Obviously, the dollar is moving, and all eyes are going to be kind of watching the Georgia election today. A lot is on the line today. For those of you that are not necessarily following it, the fate of the Senate is kind of out there today. In Georgia, if the Democrats win both, there's a tie, which means the vice president, who would also be considered obviously a Democrat, they would have complete control. The last time we saw this, we got the Affordable Care Act. hashtag Obamacare, and there was a major swing. So it could be very interesting to see what happens. And again, a lot of eyes are focusing on that. Last but not least, we will cover commodities. Now, obviously, oil this morning with that Russian news, that was a big mover. It moved very, very fast, and now it is already starting to retrace. And again, I love those parabolic retracement moves, and we'll watch that inside of a chart as well. So let me pull, let me see, where do I got it? I got it right here, okay? All right, so this is what we have in the last 24 hours. You guys know I absolutely love using Forex Factor because of the scanner up top. I'm very big on scanners. I like to see kind of that bird's eye view, right? It's important to be able to see what's going on. You could spend 20, 30 minutes to figure out what is the most powerful pair, where the most important news is. Again, this is very easy to see. You can see right now that we have movement in the pound. It's up versus the dollar. And in actuality, this is more dollar weakness across the board. Euro dollar up, pound dollar up, dollar yen down. Dollar Swiss down, dollar CAD down, Aussie dollar up by 106. That's a big one, but again, that's a gold mover over there. And then you'll see a little bit of movement in the euro pound and pound yen. Obviously, the OPEC meetings are a big deal. Saudis plan to make voluntary production cuts, so it looks like they're talking about cuts now more than anything else. Where is it? I know that I saw it down here. I have it on another window. Let me pull it up. Where is it? Right here. That Russia appears to have agreed that there won't be any increases. And again, the reason they were talking about the increases is because economies were recovering. Oil prices looked like they had stabilized. So they wanted to slowly start producing more oil. Obviously, when they said we're not going to do that anymore, that drives additional, obviously lowering the amount of supply. We saw a huge spike up, and we'll cover that inside of the charts. Let's see, it is interesting that the Saudis are mentioning that. But obviously today, all we saw is ISM manufacturing number. That's actually a great number. Seeing this the 60.7, much higher than expected, is expected to be lower. And again, having this, the PMI in there, that's probably why we're seeing a bit more dollar movement right now. Now, that's all we got for today. There's nothing else really on there. Tomorrow being Wednesday, we have a couple different things. We have Bailey speaking, and this will be the first meeting, or really this first set of speeches post-Brexit. Okay, the UK is locking down basically for the next month, maybe a month and a half. So what he says is going to be pretty important. We'll probably see a bunch of movement, and it's at 9 a.m. tomorrow. It's at the end of the UK day. So again, there could be some kind of violent movements. We also say that we have ADP non-farm employment change. This is expected to be a forecast of 60. So let's hope this actually has some decent potential. And if you look at the history of it, they tend to miss this one. So there could be some really great trading opportunity. Unfortunately, the next time we'll talk after today will be 9 a.m. So this will already have occurred. Great way to play this is going to be to look at anything basically U.S. based, or there, again, it could be in the euro dollar, pound dollar, Aussie dollar, maybe even the dollar CAD, and look at this one at about, I'd say 8 o'clock tomorrow morning, and see if it's driving into a zone of supply or demand, and look for a potential reversal off that number. Now, we also have FOMC meeting notes. So this is kind of the one caveat for tomorrow. When FOMC speaks, and again, this will be the first one of 2021, there's a lot of potential for movement. Okay, we will obviously know tomorrow the way that Georgia's swinging. That will obviously kind of weigh into what the meeting notes are going to be, some comments as well. And the reason why is because, again, when you control all, I guess, the decision making, all of Congress, right? Things like stimulus and monetary policy are going to be at the forefront. We've already seen the 2,000 number thrown around. It may even go higher than that. Question is, where's the money coming from? Who's funding it? What other type of things are we going to do for business? It's a pretty interesting situation we're in right now. So FOMC could be big as well. Going into Thursday. Now, Thursday, we have unemployment claims, and this number is expected to be 798,000 first-time claims. This number as well tends to bounce around. You guys can see the history on this one. It's been good the last two, but again, this post kind of Christmas holiday season always tends to be kind of a crazy number. This year, I think, was a little bit different because, again, we didn't have the retail shop, right? People were not going out. People were using things like Amazon. This is the year that will always be called, the death of the, the small business retail shop, right? Even the big boxes, many of the big boxes have now started to close down because of online pressures. COVID was kind of the final nail in the coffin for that one. So this would be pretty interesting to see where this one comes in at. It's obviously, missed to a good side the last two. I don't know, starting off the new year at a negative, this may be a little bit higher. I wouldn't be surprised if this comes up as a red number on Thursday. And then we have some, ISM services. Now, services are really taking a hit right now more than manufacturing. Manufacturing numbers in the world look great right now. And the problem with services is services goes back to, again, the things that we do for other people. Not a great industry right now. Now, it's expected to be lower. Obviously, the manufacturing number was good. So, again, there is a potential. But with all this lumped in, plus unemployment claims and some natural gas numbers on Thursday, there could be some interesting movement. Now, Friday obviously is the big one. First Friday of the month, 8:30 a.m. Eastern Standard Time, we have some craziness. And here's why. Unemployment change and unemployment rate. There's expected to be, obviously losing jobs in Canada. Their unemployment rate is going up. None of those things are great for our northerly neighbors. Hourly earnings not as big. The employment change, we're supposed to gain 65,000 jobs. If that's negative, it could put a really bad spin on Friday. And our unemployment rate is supposed to go up. That's what the market is preparing for. I don't think it's I don't know. It may hold. I don't see it coming down just with the holidays and again, people getting let off early. I don't think it's going to go down. That would be my take on it. And again, we'll see more after Wednesday. But I think, again, Friday is a day with a lot of impact. And remember, I don't trade them too often, but I know people that do. There's those event binaries as well. This is a day, literally Friday is a day that you can get in there and play a bunch of different event binaries. Now, I don't do it personally, in full transparency, but I know people that do. But again, they're basically made for this kind of Friday. And again, track it during the week. As far as hottest news today, you can see obviously the manufacturing number is all over. It's considered great, some growth in there. Let's see what else is there. Besides that, really not much. The other thing is the Saudis and then obviously the UK situation. I mentioned it before. The UK in my eyes right now is we're going in an attempt to go to rock bottom. Obviously, with Brexit, they're starting back really from scratch. They're talking about it being a prosperous new situation, having to lock down for a month because of COVID, the new strain that they have over there, not the best. Hopefully we get some, good data back and that, the new vaccines that are being produced and researched right now will also work, and this will be short-lived. Hopefully they can get in front of it. Again, we don't want to see the loss of any more life than we have to. And again, I think we're coming back into a time where the pound can start soaring again. Now that a lot of the Brexit situation is passed, the certainty is there, we can get back in there and really start trading that. And again, this moving 88, it's a lot more than it was just an hour and a half ago. So this is some big movement, very, very fast. Kind of some fast and furious play. All right, so let's dive into the charts. Let's go across, and we always start with the indices out there. Now you can see this is a 30-minute chart. I tend to use the smaller time frame charts for those that are not accustomed with it. We'd had this dark black line here, and I know you guys can see it. This line on here was an area that we were looking for a break, right? A break and a pullback. And you can see yesterday we got that break and a pullback. It collapsed really, really far. I mean, up from this 1295 area all the way down to the 12500 area. Now we've stabilized a little bit. And we've gotten a little bit of a pop this morning. And the question is, what do we do with it right now? This was a little bit difficult because you can see that we had quite a large spike this morning. Let me reset the time. And this happened right around this 9:15. So here was the opening candle, and it was a huge spike up. And there was a little bit of a short trade in there. You can see that it ran into some sellers, and it's right above this. You can see that there were some sellers here across, and it's pushed down. Right now, I would have to say that this is getting into more of a near-term kind of short trade situation. The reason why, and again, I don't do a lot with trend lines, but I know a lot of people understand them, is you can see that we have lower highs in here. We do have lower lows as well. We had a pullback here, another push, and now we're starting to do it again. We also had this parabolic move north. All right. So for me, if anybody's short out there, I'm not currently in this position, but I'd be looking for profit target taking around 12,645. The reason why is because again, we had decent level basing, a very, very strong kind of emotional burst at the open. Overall, I can see this coming down again. Obviously, all eyes are on Georgia as that unfolds throughout the day today. I don't know if we'll get results today, but I do know as far as Wall Street is concerned, there's one side that is considered more pro-Wall Street, one side that is considered not as pro-Wall Street. I'm not going to say anti-Wall Street, but not as pro. All those people on that side also have 401ks and retirement plans that do rely on Wall Street. So it's hard to say I'm anti-Wall Street, right? But I do think with things like, increased deficit, again, the slower rollouts, things like that, there's plenty of negativity out there. I do think this one will retrace back down to its move today. I don't have the Nadex platform up right now. I could bring it up on another monitor, but again, after this large push up, it doesn't really matter what it is on any chart. When I see this huge, just out of the ordinary type move in there, I'm typically looking for a retrace once we have a confirmation. That confirmation is in. So I'd be looking for pushes back down on this one. Looking at the S&P, you can see the S&P, we did have a level, and it was kind of the same scenario. We were talking about a break yesterday, this 37.21 of this zone here, boxed off between 37.27 and 37.21. It never gave us the pullback yesterday. It literally just dropped right through the floor and kind of pushed much, much lower than we had expected. We had some areas where we're looking for stops and profit targets. You can see we had one bounce here, and again, that area has not only been a bounce here, a bounce here, a bounce here, and a bounce here. Now, that level we talked about getting the pullback and getting short actually had a trigger this morning, and you guys can see it drove to its 1 to 3 as well as 1 to 5. This one needs a little bit more room. It's at a level that's pretty decent, had a pretty decent reaction off of it. So for me right now, if we can get back up, and I'll move this out of the way so it's a little easier to see, but if we can get back up in this 37.22-ish, and I say ish range because again, this is, I'm using kind of the platform I'm using is pulling ECN-based data, so it's not exact as far as the numbers go. The candles will look the same, but the numbers will be slightly off. I'm just trying to do it all in one platform to make it easy for you guys to read. But if we can pull back up into the area, you can see this orange box signifies an area of supply. It would technically be an area that we'd be willing to short from. But this is what I'm kind of looking for. This really fast push in this retrace is what I'm looking for in the NQ. It's already happened in the S&P, so I'm waiting for it to come back up. I'd like to see a little bit of a base, a little confirmation. But again, if you want to play some of the longer, the longer term, or their binaries, call spreads, or knockouts, this would be a level that's not horrible to kind of take it back to the downside. But I would also have profit back down, probably down here, this 36.90-ish. It's an area where we've seen, again, we've seen buyer step in here, buyer step in here, and buyer step in here. So I wouldn't be surprised, again, if we get that same level of basing right at that level. And it's a decent run going from, 37.12, about 20 points there to the downside. Not necessarily a horrible position. Going in the Dow. So the Dow, we got the pullback. All right. So here, it's hard to see on this one, on the 15 and the 5. You guys can see it a little bit easier. It was the same breakout. We talked about setting 2 alerts for that break. And again, we got the break. It kind of based and pulled right back up and grabbed it and went to a full profit target and ended up bouncing right off a 30-minute level. Now, since that time, it's kind of pulled up and it's kind of given us some short entries in here back in that same level. Again, this is why I always tell people on these breakout moves, it's a little bit riskier and it's a little bit harder to trade with a knockout. They tend to be call spread or binary type positions. Now, yesterday was an absolutely ideal kind of opportunity for binaries. I mean, this is just such a huge mover. Today, again, we're getting a little bit more chop back and forth, but it's the same scenario, right? Right here is the open. Again, we got this spike up, spike back down, spike right back up again. So the hard part about this one is really finding a good level of really kind of a place to find risk. We do have a level right now. We're kind of sitting in right here. And again, that wouldn't be green. We're not going long off of that. Let me change it to white, just so it's a little easier for you guys to see. The reason I would point out this area is, again, it is kind of, we're at lunchtime right now. The volume is lower. We've seen, a very, very strong open, a retrace back down again, and now we're pulling back up kind of to where we were before. So, we've seen sellers step in. We see lower highs in this one. You could draw a trend line if you really wanted off of this one and bring it that way. And there's your 3 touches, one here, and one here. If I adjust it right there. So you can see we do have the 3 touches. It's at a level of basing. I would probably look for more of kind of a bounce and then roll lower. I don't really feel that there's a lot positive for this one. The manufacturing numbers are great. And again, that's why we're seeing the movement that we saw. But thus far this morning, it's just been all emotional kind of news reactionary based kind of movements. Like I said, if we're seeing the other 2 fold over, I think this one is in the same situation. And it is in an area where we have some sellers. So again, just be cautious of that one. This was the one we mentioned yesterday. Again, nice drop down. I would use that same kind of level down here, this 29,884. It's actually a 30-minute level. You can see as fast as it's dropped. I love when this happens. Everybody's like, oh, don't catch a falling knife, right? And again, if you had been using support and resistance, yeah, you would have got busted a whole lot of times in here. Here was a zone that we had talked about that was a pretty decent level of basing. Right down here where we had a drop, a sideways movement, and then a nice explosion off. And you can see where was the very, very bottom? It literally turned. It ended up going about that deep in, maybe, I don't know, 5-10% into that zone before that. That was the bottom when we had a retrace. So, Again, make sure you guys are always watching your market psychology in this one. So many people that were long, they were getting out down here. It was giving somebody else the opportunity to get back into these trades. So you got to know where buyers and sellers are. And again, you're looking for the highest quality zones possible. But that's what we have going on in the indices. So let's shift gears and go across over into Forex. All right, so the Aussie dollar. If you guys were around last week, I mentioned that the Aussie dollar was kind of at the upper reaches of its curve, right? I use the curve to kind of give me a bearish or bias focus. Being high, typically you would say, hey, listen, we should be looking for shorts. The thing about the Aussie dollar is there's a couple different factors in play here. We have gold, we have China kind of coming back online and their recovery being a little bit farther ahead. They rely upon the Australian country and the Australian kind of export economy for a lot of natural resources. When China starts to move, the Australian dollar tends to kind of go up as well. Now, we also had that combined with dollar weakness, okay? I was expecting that to break and go higher and look for higher levels. So this is actually a 4-hour chart, and I know I don't use 4 hours too much, but it's approaching a level here, and again, I kind of readjusted the curve for this one. 77.66 is an area where basically a daily level of supply. So on a daily level, the last time price was here, we had buyers step in and drove this price back down again. It is, again, it's at an extreme. It's kind of one of those situations where, yeah, we kind of need some data positive for the United States, or at least for the US dollar. Producing more money, things like that, that does not help the United States dollar at all, right? The US dollar really needs some, interest rates, dollar strength. Although recovery looks great, we still need to kind of get us on the other foot. So again, weakness today with the situation in Georgia, but I do have a level that we're starting to approach up here. On an hourly basis, you can see we're pretty far up. Any profit taking to the downside, I would look at 76.60. But again, right now, I can overlay this up to a daily. You can see that this is where the zone is coming in at. I don't know if you guys can see it or not. Yeah, you can see it right there with the red. So we're very, very close. The way I would handle this one is probably the same as what we had here. Looking for somewhat, again, I typically like closer, but kind of a failure to go higher situation, something like this right here, right? Where we come up, we start to kind of stumble a little bit, right? We push down, we get a little bit of space here, come back up, and we do not push higher. That tends to be a trigger for me for a short. Now, obviously, we're very, very high. We're close to that daily zone. If we can get some type of a basing and a push back like this, that would be for me a signal. Now, we don't have it yet, but it will happen this week. So again, keep your eye on that one. And again, it may be associated with US-based news. Now, Aussie Yen is another one that's pretty popular among traders. I like the Aussie dollar at night. I think that the Aussie dollar is wonderful to trade at night because, again, when Australian news is released, the yen tends to be pretty weak as well. You can get some great movement. And in fact, if you look at this one, let's see, last night would have been right in here. We had this basing level off of this pop. So here was a long trade, and again, not too bad at all, about 55 pips in the overnight there. We're approaching levels right now, which you guys can see. I'm on the 30-minute, but you can see we kind of have an aggressive entry at 79.60 and one just above it. If I go up to an hourly, you can see the hourly, again, the aggressive entry is at 79.60. Just above, you can see at 79.70-ish, about 10 pip range there. We have a daily zone, and again, a failure to go higher. A pop, a base, a drop, and it pulled back down to here. Went back up, did not go as far, and then bam, collapsed, and it got front run here as well. So, we're kind of in that area where we are looking for somewhat of a reversal. And you can see these are 4 candles, pretty much straight up, no wicks on the bottom whatsoever. And again, that's 4 hours of straight in one direction. Typically, and if you look in here anywhere else, here was 3 before it retraced. Over here, this last time we had, 3 major candles, and then we started to retrace back down again. So that's kind of what I'm looking for, is probably something that looks like this, right? Like that, or even like this in the opposite, right? Big push down and reverse, looking for this push up, a basing kind of failure to go higher, looking like this, a rollover back down. And again, if I throw your 1 to 3 risk reward on there, you can see we would need the least movement to there, if not lower. 1 to 3 is here, 1 to 5 is here. So again, decent rollover here. But again, we need that little confirmation at the top. So Aussie Yen is in play as far as potential trades today. Euro Yen. So Euro Yen has been a little bit more flat. We've had entries up here that we're looking to get short at 126.78. Again, we had a nice rollover from that one. You can see it kind of pulled back. Now we've been just kind of more or less moving sideways. This is not really a whole lot of movement. And the candles that we have here, they tend to be more wick than body, which again is not showing us a lot of conviction. Okay, we did have some great movement, but right now we're kind of stuck, and you can see it here. There was this gap right here that occurred on basically this is New Year's. Right here was the New Year's gap that we bounced off of right there. And that's kind of what we're stuck in right now. Um, as you guys can see over here on the right, this is my curve. And again, all this is I'm drawing kind of high quality supply and demand top and bottom, and then I'm breaking it into three pieces. So it's a little bit off right now. This should probably be a little bit lower, right? You guys can know, if you guys know how to augment your Fibonacci tool, you can use your Fibonacci tool to use a 0, a 100, a 33, and a 66, and that will give you kind of a good divider. I use my Fibonacci tool here for risk to reward so I can have it easily draw it for me. But right now, it's kind of one of those things. Do I really want to go long when we're already in this upper section? Not really. It's an okay zone. It's not a great zone. I think there's a better zone a bit lower down here. I'm kind of more in the thinking that I kind of like to get short this position. But right now, there's no great quality areas of selling until we get back up to this 126.78. So it's something to keep on our radar. If we continue to crash lower, there may actually be some type of a short entry lower. But right now, again, with knowing that buyers have stepped in, we have on the 30-minute a level of buyers right below it. There's an hourly level overlap there. You guys can see it right there. There's the hourly level. It's hard for me to go long or short right here. We really need to kind of push in either direction, top or bottom, as far as the euro goes. We may get some movement later in the week, but right now it's you guys can see it. It's more or less basically for 12 hours we're in the same exact spot. Not too much movement. Now, pound yen. So pound yen earlier today, I mentioned that I'm looking for a break of 139.46, and I'm looking for this to go down all the way more or less to 139 flat. Now, you can see that we did get a little bit of a bounce. I mentioned that if you're using knockouts, and there is a knockout sitting approximately here, maybe not a check. A check is not the best one. Let me delete that one. I'm going to say, I'm not going to give you the exact one because I want you guys to do the homework on it, but right about there happens to be a knockout. And I mentioned if this came back up into the 140 range, that could be a potential entry. Typically for breakout trades to the downside or upside, we don't use knockouts because they're in close proximity. And unfortunately, when you're knocking below things, it doesn't give us the best entry because we're not necessarily protected. They tend to be more of call spreads or binary trades. Now, this one has pulled back, right? I said if we got the break of 140.46, we're getting short. It didn't do it, which is good, right? It's not necessarily bad. We didn't get into a trade, no harm, no foul. It did pull up and give us a better chance to get short. Now, do I think the pound is going to be nothing but full strength? Probably not, but it is giving us an interesting opportunity. And again, there's going to be risk in every single trade. We've seen it pull up. We've seen sellers step in here. And again, this is that failure to go higher pattern. So again, you could use one of those other binaries, call spreads, or knockouts that are based a little bit higher here, again, to take this short. I'm still waiting for the 140.46. Again, if you know how to set an alert, set yourself an alert as we have a break of that level. I think it's a great level. The fact that we took one more bounce of it just shows me that there's that many less buyers sitting there that next time we come down, it's even a higher probability to break and go lower. And it's a decent run. In the pound yen, you're talking about 40 pips. The 1 to 5 is all the way down here at 63, and I think that's pretty decent. I think we can get 50 pips out of this one with a decent break and a pullback. All right. Looking at the pound dollar. So the pound dollar is actually in a very interesting space. Okay, on a 30-minute, you can see that we had a level sitting right there. Now we've been able to kind of break through, and it had some problems, right? It poked up and came back down, poked up and came back down, and finally was able to punch through on the third punch. Right now, for me, I am looking for this area up here, 136.83. It's going to take some continued dollar weakness. I think it will probably unfold during the day as we get news of the Georgia situation. But I do like it. And in fact, I'm kind of hoping it slows down a little bit. Not necessarily pulling back, but I'd like to see it continue up. And ideally, I would like to be up this 136.83 at the European Open tomorrow. I think if we can get up here for the European Open, that would be an ideal situation. And the reason why is because, again, we already know that sellers have stepped into this level. We know that right now there's nothing slowing us down. After having a hugely emotional day, they tend to retrace. So if we can continue this emotion forward, come back up here, get the oomph from the European Open, get it to roll back down again as we have certainty what's happening in Georgia. Again, a lot of these things are fundamental kind of ideas that again would match the technical. All right. As far as the other side goes, I think 135.38 is important to keep our eyes on. Last time the price came down here, it was front run and kind of established a new rally. Again, ideally, though, I'd like to take this one short coming from up here or even a little bit higher. But I think 136.83 is the first level of getting short. A second one would be just higher up here, up at 137.56. And those are starting to mess around with daily, 4-hour and daily levels as well. And again, being at the extreme range of the curve. Euro pound. So euro pound, I'm kind of disappointed in. I was like, come on, just go, keep going. I need you to go a little higher. And then it died on me. So when I did this analysis yesterday, we were talking about, we were sitting, let's see, right here. And I love the way that this looked. I knew that it was going to have some problems with this little level of basing. And I was like, come on, you can do it. You can just go a little bit farther. And it did. It kind of pulled back. It grabbed some more orders and burst through. And I was like, yes, now we're moving. And then unfortunately it ran out of steam. Okay, so I'm still looking at this one. It's kind of on my radar. It's in the middle of the kind of the curve right now for me on a small time frame. So I do have some alerts set on this one, so I don't have to watch it. But 90.75 is an area where I'm pretty interested in getting short. I like how the highs here kept getting lower, and then this last push was a very strong move. So I do like that one for a short. It's not going to happen today. I doubt we're going to get that push. It's about 55 pips. Again, right now, looking at this, I would have to say I'm a bit more bearish in it, not necessarily getting up to here. Again, the way that this is established, again, it's getting stuck in a level of basing, but if it breaks much lower, I would have to say look for this one to kind of roll back down, probably into the 89.43. I would like to see some negative news out of the pound, or maybe even some positive news out of the euro to give me that pop up again. But right now, levels that I am looking for, and again, not today, maybe later in the week, is this 90.75, 91.40. It's another level I do like. It's very clean. I like how it was established. And I think targets to the downside is also down here at 89.43. Going across to the euro dollar. So euro dollar, we had this nice little pop. And again, there was a trade that was set up here. Again, that would have hit yesterday, I believe. Yes, that was from yesterday morning. Since that time, all we've done is the same retrace that we've talked about. This is in the same kind of situation as the pound dollar is. We're kind of an extreme. It's not the freshest of levels. You can see that it hit here, it hit here, it hit here, it hit. And again, 1, 2, 3, this is number 4. So I'm kind of expecting this one to break to the top side. As much as I'd love to say, hey, listen, this is a great time to get short this one, I don't know how many sellers are left here. Okay, I don't have a crystal ball. There's no way to actually tell how many sellers are there unless the price turns around. If the price doesn't turn, I know there's no sellers left. If the price turns, I know there's some sellers left in there. It's the only way you're going to be able to determine what's there. I think today, as this unfolds, again, it's a little bit too early to get anything out of Georgia. I think that's leading, and again, the PMI number as well. Obviously, that manufacturing number helped a bit. I think a better short comes in up here really at 123.67. If we can get a bounce through, and again, this is that Harry Potter trade. If we can get a punch higher and then kind of a pullback to that level, I may actually be looking for a long later today, just with continued dollar weakness. I just feel with everything, if it's able to punch through, I think there's a long target there. As far as taking it short, I don't think I'm going to be that interested in taking it short as a rollover here. If it does go short, then I'm definitely keeping this on my radar for a long once we're able to break through that top. The 1 to 3 is in a good place. This would basically be a break of, let's see, approximately 123.09, a pullback of that level, and then a punch up into the 123.56, or even a little bit higher up to the 123.67. So, not a bad mover, about 40, 50 pips on the top side. Again, if we can get that with the European Open or some type of big data like the ADP number tomorrow, if we can be kind of just a little bit above and a pullback before that ADP number, that's a good opportunity to take this long to the top side. And again, maybe there'll be a knockout over there. Maybe there'll be a binary, maybe even a call spread tomorrow morning, depending on what time we get back to that level. Now, if it does turn and roll back down again, no harm, no foul. I'm really looking for a breakout. Like I said, my confidence of this one kind of rolling here, yes, it's done it in the past. But every time this hits, there's less and less sellers sitting in that area. And as I said, this was really not the first hit of it, but this is deep, this is deep. This went literally to the brink, and now we're coming up here again. So it's one of those things. The more times you hit a zone, the less probability it's going to, continue to hold. And, right now, just with everything, I think it's worth more of a long than it is a short. So dollar CAD. Dollar CAD has been collapsing. Now, this collapse, I know exactly where it came from. This collapse is coming from oil. Oil is good. Canadian dollar strengthens. Why? It's their number 1 export. They take crude oil. They typically send it all to the United States. We refine it, sell it back to them at 3 times the price. But it does give them, more power. And again, it's directly associated with what we're seeing in oil. Now, again, we also got a huge spike before. And again, this was kind of the OPEC meeting and everything was going on. And then what happened is it retraced back down again. This one, as you guys can see on the larger time frames, we were looking for longs down here at 125.70. I would say at this point, really with everything going, although the demand situation is not necessarily great, I don't think the dollar's in a great place right now. I think we will continue to see a bit more dollar weakness in this one. So I'm actually looking for this to push lower. There's a small trade in here. I mean, I can take this, this long here and rotate it forward this way. There's going to be a small position in here. Whether or not it's worth it at this point, it's entirely up to you. It's kind of a smaller runner. I mean, I guess it's about 50 pips, right? Yeah, about 60 pips to the downside. If we have a break, and maybe I can, refine it a little bit more on the 30-minute. Let's see if we can get something decent in here. Yeah, I mean, you can see that's where the zone is. There wasn't really a pop until really here, so I'd use probably that level more. We're in it right now, so if you guys are looking for a trade or something to, again, kind of try something new, I'll make this a little bit darker so you guys can get a little bit graphical, a little bit better of a graphical view of it. This level right here is a break of 126.65. Okay, it's a little hard to see because it's a line, not a ray, but 166. Actually, I'll just delete it. I thought that was going to work, but I guess it does not. I'll do it on this side. Whoops. Always helps when you hit the right button. Right there. Okay. So a break of that line is 126.65. I would ideally like this one to pull down a little bit base, then pull back up again, and you'll use this level of risk. It's 126.65, and the top side of that one is at approximately 126.86. So again, about 15, 20 pips worth of risk. Looking for that one to collapse about 60 pips to the downside, and it is before the high level area of demand. So not necessarily a bad trade setup. Again, we need that basing punch and then pull back for the dollar cat. Now, dollar Swiss. Dollar Swiss came down and we took a bounce off a level that we've been waiting for a long time. Now it's continuing to push lower, and again, this is basically a situation where no news is good news for the Swiss, and again, the dollar is continuing to weak. I wouldn't say that the Swiss is getting any stronger. They have the same exposure that we do. They're having the same issues that we do as far as COVID goes. Right now, this is just nothing but a pure dollar weakness play. Don't really have anything I love in this one. There was some movement last week. There was a little bit of a play that we could have taken on that. Unfortunately, really where the gap was, it never really gave us a true entry back on the hourly chart. Just not a big setup that I love in this one. If I had to pick my direction, I would say that I'm probably still a bit more bearish. I know we're sitting in an area of demand. But like I said, the Swiss not being in the news, not hearing a lot of information, I think that for the most part, this is nothing but dollar weakness, and I think that'll continue. So not a lot of setups on that one. Now, dollar yen. So dollar yen had a trade set up. There's a couple things that was going on with this one. One, we were looking for a clean break of this 102.97. Now, this was a level we had talked about before, kind of the same scenario. And this is kind of what it looked like. And again, if we refine the level a little bit, we'd have to actually refine it to its most recent. It's there. You can see we got that break. Here's where the alert went off. Again, did not trigger here, did not trigger here. It dropped, it based, it pulled back, and there was your short entry. We got it one time. Now, when we look to see other supply, there was another supply level that came in. That's correct. Again, we've had this push to the downside. Really on this one, I got to go to a little bit higher of a time frame to kind of figure out what's next. We are sitting basically in that racetrack right now. I don't see many buyers. And again, I'll remove this right now. The trade's gone. It's already too deep and don't do much with it. Right now, I would say probably where this is going to slow is most likely down here. You guys can see that we are sitting in, it's a daily zone that we're sitting in, that we're aiming for. So I would say, yeah, let's see this one come down. I think 102.40 is a decent level to look for a bounce. The other side of it is 102.25. So about a 15 pip kind of range there. And again, this is a 4-hour chart. Again, this one will have some movement tomorrow, one way or the other between Georgia, the ADP number. And again, would I use this level up top? Yeah, I think this is a decent level. If this does manage to kind of roll over tonight, if we can get back up to the 103.20, really back up in this level here, I'd be willing to take this one short one more time off of that level. Okay, and I'll put this down here so you guys are able to see that as well. Right there, 103.40. All right. So again, if we were short from 4, you're still good to go. Take your profit before you hit 104. And again, if you're in this one short, 102, probably 45 is a safe way to do it. Like I said, this is a daily zone. There tends to be buyers sitting around that level. We've seen it in the past, and it had pretty decent movement off of it last time. It's been a while, but yeah, we've had some decent movement off of there. Again, this large green candle is what we ran into. Let's go back. You guys can see it right there. It was the basing level for this big push up on the 4 hour. So, it's definitely a level where buyers have stepped in the past, and just something I'd want to be cautious with. All right, so let's go across gold. So gold's got an interesting setup. Now, there's a blue line and a yellow line on here. These actually I both put on Monday when we were talking about different knockouts for gold. Again, Monday morning, we got this huge push up, huge push up, huge push up. And I talked about, hey, listen, this could be an opportunity to short, but with stimulus talks and again, if Georgia sways the Senate, there's absolutely a bill of at least 2,000, if not even more, coming through on that one. All right, as people have realized that yeah, there is a chance, right? There is a chance. Absolutely, without a doubt, there will be a bigger stimulus check coming. Without a doubt, there's going to be checks written left and right, right? So that's provided us with this push. Since that time, after the push happened yesterday, gold kind of flatlined. Okay, it's running into a little bit of a hangover, right? Everybody sees that. I know there's areas below that it's been able to pop off of, but we're getting up to a level up here at 1958, which is a level that we've had some decent selling for in the past. The dark blue line here, this is up at 1969, is actually the top side of a knockout bracket. I'm kind of hoping we can get this to push up a little bit higher and put us a little bit farther up here into the zone. Again, the yellow signifies where the knockout bracket is, top and bottom. So you can see we're kind of at the top third right now. If we can get up really up in this area where this red line is, that puts us in a level where we have a decent level of risk. It could look something along, again, if we wanted to take that full area, you can see your 1 to 3 risk to reward ratio is well within the other side of the opposing, the opposing bit. We could look for a failure to go higher position that could potentially even lower our risk a little bit more. And you can see there's a 1 to 3, 1 to 5, well within this knockout range. So I like this one. I'm not at a point yet where I'm willing to pull the trigger on it yet. I'd like to see it go just a little bit higher, but I am in a situation where it's kind of like, yeah, gold could be it could be an intraday type of short position here. I do think if the Democrats end up doing well, taking both seats in Georgia, I do think this will spike higher. My only concern is, and the reason I'm not getting into this knockout now is because I do think there could be a spike higher with the assumption that, Nancy was already on board. Let's do 2,000. The Democrats have always wanted to do a big number. If the Republicans can't stop them, the Democrats can throw any number they want out there. Let's give stimulus to everybody, $1 million, right? No, there's no one to stop them, unfortunately. It just can't happen. So again, I think that is a case for potentially going long. And again, if the other side, if the Republicans win, they can stop anything like that. They can keep it from going through. I still think it's a battle. I still think there's more stimulus coming. But right now, again, everybody that got long here on Monday, if they haven't already taken their profit, they're looking for an area to take profit. Okay, there's a reason why that people are selling things when it's rallying. They're taking their profit. Okay, now silver's in kind of a similar situation. We've had this intraday level drawn for a while for silver. Let me change this across to gray, just so we stay consistent. But there's kind of the top and bottom of our curve. Now, we know that we have sellers coming in approximately around that 2761 area. You can see this top side here. Again, we've hit it. We've been pushed down. We fought again. We fought again. We fought again. So we've hit this area a number of times. It's only gone about 50% of the way through the zone, so it's not as dangerous as what we've seen in some of the other pairs. Again, Monday, we were looking for really kind of a push down below this 2665. So we're pretty high right now. I would have to say, I would like to get short this position. The way the candles are forming, I don't really necessarily have the best. It's not the best form zone. If we go up to an hourly, you can kind of see where the zone was formed. And again, the 2764, is the top side of a 4-hour zone. So we're talking about bigger time frames here. Again, it's going to have just the same exposure to Georgia and everything like that. It will get pulled along with any type of a gold story. As far as great setups, I mean, we had the one Harry Potter trade down here, but we're so far away from it right now. It's probably not on the books for this week. And again, it's got to be able to break through. Last time it was down there, it took a bounce. So, right now I'd like to get bearish. I don't necessarily have a trade setup for this one. Again, we are kind of in extreme. If you wanted to play this one, I think once the Georgia election information is out or we get any type of official statement on that one, again, a lot of this will have to do with what we see tomorrow too. If there's a disappointment, I could see this one going down pretty quick tomorrow as well. So again, this one is one that's good to trade around gold. Also, don't forget FOMC meeting notes tomorrow at 2 p.m. FOMC will typically mention things like inflation. There was talk yesterday of, well, there's two different headlines. One of them, they were saying that they see inflation of 2% for the coming decade. And then another one was saying that there's inflation nowhere on the radar, that it may take until 2022 so they can get back up to 2% inflation. Again, that's why you're seeing kind of a big spike down. So FOMC is the one kind of monkey wrench in both gold and silver that we need to be very cautious of in the next 24 hours. Okay. All right. Last but not least, let's go across and let me find where I'm hiding oil. So oil. Am I surprised? Earlier today, we were talking about how this is a nice little pattern. There's a potential short, but I gave you guys the warning that if OPEC hadn't come up with any type of conclusion response, right? It was really going to come, depending on what we heard is what was going to drive this next movement. If we heard nothing, we expected it to go down, and it did continue to push lower. And then all of a sudden, we got the headline about Russia about, hey, we're not going to do that. And then Iran says, or I think it was Iran or Saudi Arabia. I'm sorry, Saudi Arabia said that they're talking, looking into production cuts. Again, that is a lower supply, which again would be great for oil. Now, oil is punched pretty high. We've got a little bit of a pullback, and now you can see we have a little bit of a topping situation, right? It didn't quite go as high as it was before. A lot of the oil news is now out, okay? Because this was such a fast move, we should be looking for some type of an opportunity for a retracement. Now, we do have a higher level zone up here. Again, this green one that I did at 50.20 and 50.63, that was an area where we said before, if price was able to get there, we were looking to get short. Question is this where the turn is going to be, and will price push back down? Remember, this whole push today, this emotional move, was because of, again, not increasing production by 500,000 barrels a day, right? Or 500,000 barrels a day. I think it was 500,000. But basically, increasing production. Then the Saudi Arabia just says they were interested in cuts. So again, it's not the supply, not the increase in supply that we expected, and somebody else talking about cutting. But the reason why those things are happening is because of what? Lower demand. Japan is having issues. They're having a COVID emergency right now as well. Haven't had anything since April. The UK is now locked down. Is someone else going to be next to lockdown, and will that lower demand even further? And if so, with less demand, fundamentally, what will oil have to do? It will have to roll over back to the downside. So right now, this is all because of everything that OPEC Plus has said. Saudi Arabia is saying that they're going to increase cuts. But again, large emotional response up. The market was not prepared for that one. But at this point, the market has to be prepared that, hey, listen, the reason they did all these things was because of lower demand. How much longer could it exist? Again, it's one of those things. It's a fundamental basis, but you got to watch it. And on a technical chart, it is very, very high in the curve. It's approaching that 50-20, and right now it's been unable to push any higher. Even on a 15-minute, let's see if there's a decent candle. It's okay. I'll pull this one up so you guys can kind of get a kind of an image of it really easy here. We'll change this to red. All right, something along those lines is kind of what we're looking at right now. And again, didn't go as high, went pretty close. So a couple ways you could play this. I mean, we could be looking at, overtaking something if it crashes through below here. Again, this was, kind of one of those opportunities where, you will see support and resistance traders trying to step into this one. If you wanted to lower your risk, you could potentially get even a little bit higher here. But right now, again, it's lunchtime. We haven't seen any kind of power come back, but I would not be surprised if this rolls over and we find ourselves back down here closer to 48. Or maybe, I guess we're at what, 79, 49. Yeah, 49 is right in here. And again, 48 is down. So yeah, we're one day before the oil inventory report. I think the oil inventory report tomorrow will give us the oil that we need one way or the other. But remember, recent weeks, we've seen a lot of the movement in oil happen from the UK Open till the time of the release, not necessarily at the release. All right. So that's it for the charts, guys. Don't forget the market calendars next week, Tuesday, January 12th at I was like, wait a second, at 12 p.m. Eastern Standard Time. And remember, we are on every single morning at 9 a.m. That is actually not a webinar. That is actually over live on YouTube. The way to find it is go to YouTube. Just search Nadex and you will be able to find it. Make sure you subscribe to the channel. That way, anytime that we pop up or anything, you'll get a notification that we're going live. And we do that from 9 to 9:15 Eastern Standard Time every day. If you have any questions with anything I said today, you are more than welcome to message me directly. If you have questions about the platform, please go ahead and message Nadex directly for that one. But if you have anything that I said today, or what's a Harry Potter, Brian? You're more than welcome to message me. I try to answer these as fast as I can at support@keeptradingsimple.com. Again, we do a live broadcast every morning, and then I typically will jump on with my students afterwards right on Twitch if you want to watch that as well. With that being said, thank you guys so much, and I will catch you whether tomorrow morning or next week. You guys have a good trading day. Take care.